One man, alone in a palace, is writing the future on a blank page, not with laws or treaties, but with numbers. He is inventing a new kind of magic, wealth from nothing. He will convince a bankrupt kingdom to burn its gold and worship paper. He will merge the national treasury with his private company. He will turn the national debt into a speculative mania so violent it will invent the very concept of a stock market crash. His name was John Law. Gambler, murderer, economic visionary, and the greatest con man in history. This isn't a story about a market cycle. It's about a psychopath who hijacked a nation's reality, who discovered that if you control the story of value, you control everything, and whose ghost is grinning in the code of every modern financial crisis, from hyperinflation to crypto, whispering the same lie. This time is different. France, 1715. The Sun King, Louis XIV, is dead. He leaves behind a glittering catastrophe. The treasury is empty. The national debt is so immense it's a mathematical joke. The country is mortgaged to the teeth, and the creditors are circling. The state is bankrupt. This isn't a problem. It's an opportunity, because into this void steps John Law with a radical, beautiful, insane idea. He tells the new regent, Philippe d'Or, your problem isn't debt. Your problem is money itself. Gold is primitive. It's scarce. It's dead weight in vaults. What if money wasn't a thing, but a promise? A promise of future growth, controlled not by God or nature, but by a bank. My bank. What if, he says, we could spend our way out of debt? Welcome to Economic Historian. This is the story of the first time a government tried to print its way to prosperity, the first global financial crash, and the madman who engineered it all, not for mere profit, but to prove a theory about the human mind. Act 1. The master of the game. To understand John Law, you must first understand that he saw the world as a system of levers and psychological triggers. He wasn't a banker, he was a gamer, and he had spent his life mastering the highest stakes game of his era, probability. A Scottish exile, a convicted murderer who escaped prison, a legendary gambler who mathematically broke the card tables of Europe. Law didn't believe in luck. He believed in the house edge, the structural advantage built into the system. And in 1715 France, he saw the ultimate table. A bankrupt state was a casino where the house had lost. His plan? Become the new house. Rewrite the rules so that the edge always flowed to him and, by extension, to the state he now controlled. He established the Banque Générale. It wasn't just a bank, it was the first modern central bank. It issued paper notes, backed by the king's promise. This was the first lever. Replace tangible gold with sovereign trust. But paper money was just the fuel. He needed an engine, a story so big, so seductive, it could absorb the entire crushing weight of France's debt and transform it into perceived wealth. He found it on a map. Louisiana, a territory larger than Europe, supposedly bursting with gold, silver, and limitless riches, a blank canvas for the most extravagant fantasy ever sold. He created the Mississippi Company, granted a monopoly on this fictional El Dorado. This was the second lever. Merge the promise of infinite colonial wealth with the machinery of the state. The stage was set. The gambler was now the croupier for an entire nation, and he was about to deal the most dangerous hand in economic history. Act 2. The 3 laws of the bubble. Principle 1. The law of narrative alchemy. John Law's first and greatest law. In a new financial system, the story is the only true collateral. He didn't sell minerals or land, he sold a vision, a dream of a French empire in the New World that would dwarf Spain's. His propaganda machine, newspapers, pamphlets, staged events, was an 18th century hype machine. His metaphor: he was a financial playwright. The French economy was his stage, and every citizen was an actor in a drama called the Mississippi Gold Rush. He planted stories of mountains of emeralds, rivers running with gold. He paraded Mississippi natives in Paris. He made the fantasy tangible. Modern translation? This is the birth of the story stock and the narrative asset. Value is no longer tied to present earnings, but to the potential of a disruptive future. It's the dot-com boom, Theranos, the meme stock rally, the crypto white paper. The asset is a vessel for a collective belief. Modern parallel? The crypto AI hype cycle. Look at any cryptocurrency with a multi-billion-dollar valuation and no real-world use. Look at AI startups with staggering valuations based on potential, not profit. They are pure narrative assets. Their value is a function of the story's power and the size of the audience that believes it. John Law would recognize the mechanics instantly. He wrote the playbook. Principle 2, the law of the debt value engine. Here is the diabolical core of Law's system. His second law: you can create value by performing a magical swap. Turn public debt into private equity. The French government owed vast sums to creditors. These were bonds, IOUs, trading at a fraction of their face value because no one believed they'd be paid. Law's masterstroke? He had the Mississippi Company take over the entire national debt. In exchange for their nearly worthless government bonds, creditors received shares in his company. Shares backed by the glittering promise of Louisiana. Overnight, worthless debt was transformed into growth stock. The share price exploded. As it rose, the company issued more shares to take on more debt, which pushed the price higher. It was a self-licking ice cream cone of financial illusion. His metaphor? It was a financial furnace. He shoveled the cold, dead weight of sovereign debt, the coal, into the blazing furnace of speculative frenzy, the Mississippi Company. The heat and light it produced, the soaring share price, was mistaken for real wealth. Modern translation? This is the precursor to quantitative easing, QE, and government bailouts. The modern version is less direct but structurally similar. A central bank, like the Federal Reserve, creates new money to buy government bonds and other assets, pushing their prices up and creating a wealth effect. It transforms debt into market liquidity. The goal is to stimulate, not to swindle. But the mechanism of turning liabilities into perceived assets through monetary intervention is pure John Law. Principle 3, the law of coercive participation. But bubbles are fragile. Belief needs enforcement. Law's third law: when persuasion fails, use the police. As doubts crept in, Law didn't just rely on his story. He used the absolute power granted to him by the regent. He made his paper money legal tender. Gold and silver coins were outlawed. You had to use his paper. He banned the hoarding of precious metals. Citizens were forced to bring their family gold to the mint. He deployed police and informants to arrest anyone caught criticizing the system or trading shares below the official price. He turned the free market into a manned economy for speculation. Participation wasn't optional. To opt out was to be a criminal, a traitor to national prosperity. His metaphor? The economy became a financial panopticon. Everyone was both investor and inmate, watching each other, forced to play their part in the charade for fear of the consequences of stopping. Modern translation? This is the dark side of financial repression and capital controls. While modern democracies don't use police for this, they use subtler tools, keeping interest rates near zero, punishing savers, forcing them into risky assets, moral suasion, and the implicit too big to fail guarantee that forces taxpayers to backstop speculation. The message is the same. The system must not be questioned. Get on the train or be left behind. Act 3. The synthesis. The crack-up and the ghost. So what happened? The engine ran too hot. The story met reality. Ship after ship returned from Louisiana not with gold, but with tales of swamps, disease, and no riches. The first smart money, the nobility, the insiders, started to quietly cash out their paper for tangible assets, land, art, jewels. The whisper network became a roar. The narrative cracked. In 1720, the bubble burst with apocalyptic speed. The Mississippi system collapsed. The paper money became litter. The shares became wallpaper. Literally, people used the stock certificates to paper their walls. France was plunged into an economic darkness that would fuel social resentment for decades, a direct fuse to the French Revolution. And John Law? He fled disguised as a woman, dying in poverty in Venice. The master of the game was ultimately